and welcome subscribers to the Saturday Summary for May 3rd, 2014, your weekly summary of market and economic news for annuity and life insurance professionals. I'm Jonathan Nilliger of Brokers Alliance, in for the biz. Now, as always, we begin with what happened this week. Now, the broad U.S. indexes gained this week, with both the S&P 500 and the Dow Jones gaining nearly a percentage point through Wednesday. But just as we saw last week, the latter couple of days saw declines. Now, this once again leads me to quote Led Zeppelin in my headline, "The song remains the same." Specifically, despite this week's gains, the S&P is up only 1.77% year to date, while the Dow and NASDAQ and the Russell 2000 indexes remain negative year to date for 2014. Although less so than this point last week. Now, Friday saw all the broad indexes drop, but not by much, as violence and international tension over the crisis in Ukraine continued to escalate. Now, the unemployment report this week was good, with the official unemployment rate ostensibly dropping to 6.3%, but this was pretty much ignored by the markets, largely because, at least based upon commentary in the financial press, that no one really believes it due to the flawed manner in which it's calculated. Now, in other news, the Federal Reserve had a meeting this week and reduced the pace of its quantitative easing, or QE, stimulus to only $45 billion per month this week. And thus far, it seems the Fed is remaining steady in its intention to end this stimulus, which has really only benefited the stock markets. Even federal officials admit that openly. And they're going to end this by the end of 2014. At least that's the track that they're currently on. Now, as we featured and charted several times in this summary, there is a direct correlation between the Fed QE stimulus and the rise of the stock markets over the past few years. So the question is 2014's lackluster market also correlated to the decrease in QE stimulus? Seems highly likely to me. Now, if so, absent some other economic miracle that doesn't seem to be on the horizon, as QE stimulus decreases, the markets may run out of fuel. Let's hope that the fuel runs out slowly and not all at one time, as again, as I've said before, a crash is really not good for anyone. Now, of interest to all engaged in retirement planning and, frankly, just living, is the chart we see here, which shows relative U.S. inflation over the past 10 years. Now, it's based upon the CPIW, which is admittedly flawed, but this chart explains why the official inflation rate is so low despite a noticeable increase in real living costs for most real people. In a nutshell, the analysts who derive, or perhaps contrive, the inflation numbers essentially offset the increase in costs of things like food, tuition, and health care by decreases in costs for things like cell phones, clothing, and computers. Now, to me, it seems correlated to those items manufactured overseas versus services and food and other things that we have to buy domestically. Now, I really want to feature this. You definitely want to read the article on page 4 titled "Retirement: While You'll Spend a Fortune on Doctors and Rent." Now, this article discusses some statistics about what retirees spend their money on. And there are two things that really stood out to me in this article, but it's a long article. You want to read the whole thing. Go to the link. Well, first, the increase in the percentage of income spent on housing and health care for those over 75 being due to fewer people in the household. Huh? Well, in other words, the death of a spouse. Now, at Brokers Alliance, we equip our producer clients with a calculator and some training that estimates the surviving spouse pension and income gap and how to close that gap well before the death of the first spouse. Now, the second thing that really stood out to me about this particular article was the very specific recommendations for the use of guaranteed annuities for lifetime income and long-term care insurance in the form of either a traditional policy or as a rider on a permanent life insurance policy. Now, of course, we at Brokers Alliance have expertise in all of these recommendations that are made in the article. Now, we have 3 good quotes this week to share with our clients and prospects. This one's my favorite. It's from James Montier at GMO. It's a big money management firm, who wrote, "We've gone back into this kind of a foie gras bubble environment. We're all being force-fed risk assets. It's an unpleasant experience when you're playing goose to the central bank farmer." Well said, Mr. Montier, and you can laugh at my French pronunciation, but please don't send me any emails about it. Well, that's all I have time for today. Now, if you want to see something covered in the summary or have comments, please contact me at the email address scrolling along the bottom of your video player. Of course, if you want a better quality of true support in your life and annuity practice, again, more than just products, contact us here at Brokers Alliance. Well, that's your Saturday summary for Saturday, May 3rd, 2014. As always, thank you for joining us. We appreciate our subscribers, and we'll look forward to seeing you again next Saturday. Thank you.